good to go, Anthony?
Yes, we are.
Hey, Nation. I want to first start out by saying thank you for all the calls and all the meetings set over the last 30 days. It's been a whirlwind. I want to first start out by saying I missed 2 meetings. Our team missed 2 meetings because it's just been an influx of inquiries and interest, and it's been really, really exciting. I've been communicating with the 2 people I haven't met with, and you're probably on the call right now. I know at least one of you is on the call right now. You have my number. Shoot me a text. I'm sorry about missing that. It has just been wild. The takeoff of DocNation has been wild. The need is there. And we're here on our 7th webinar, I think it is, to address money for doctors. One of the things that we want to do is that we want to create strength among physicians, right? And so autonomy and money are 2 very, very important things for DocNation and how we want to represent Nation as a whole. And so we have Doc Lending here with their representatives, Josh Lumbley and Kyle Moyles. Dr. Moyles, I'll go first with him. He is a strategic advisor, and I try to remember these things, but you guys always have these laundry lists of things. You know what I'm saying? He's a strategic advisor and investor in Doc Lending. He's an orthopedic surgeon with a subspecialized training in hand surgery. He is the managing partner at Melbourne Hand Center and a board member of Cypress Bank. Dr. Moyles received training at Brown Medical School and his hand surgery fellowship at University of Miami of his orthopedic residency and and at Florida Atlantic University for his MBA. He's an avid investor and entrepreneur and leads an influential cohort of surgeons in Melbourne, Florida. Dr. Moyles, thanks for joining us. We appreciate it.
Absolutely. Thank you so much for having me.
Yeah, this is a big deal for us because if we're going to make any noise, if we're going to get done what we want to get done, financing is a very important piece of it. The strength of doctors and their finances is a very, very important piece of it. Dr. Lumbley. Dr. Lumbley is a strategic advisor and investor in Doc. He also serves as Chief Quality Officer for North Star Anesthesia. Dr. Lumbley is a medical school graduate of Baylor College of Medicine and completed his residency in anesthesiology. Help me out with that.
Perioperative medicine.
Perioperative medicine. I had my wife come in here and say, will you read this for me real quick? So thank you for that. Pain medicine at Brigham and Women's Hospital in Boston, Massachusetts. Josh also holds a master's degree in business operational excellence for the Ohio State University. He was previously a fellow with the American Association for the Advancement of Science, informing congressional health policy. Thanks for being with us, Josh Lumbley. I appreciate you, bud.
Yeah, it's nice to be here. Thanks for the invitation. Looking forward to the evening.
Yeah, so there's a significant piece of political action that we need to undertake, and we'll touch on that a little bit later. But I want to start off by saying, what is Doc Lending? Why is DocNation bringing Doc Lending to our nation? We have hundreds of doctors on the call right now. I can't remember the exact number at the end there before we started, but we're really, really focused on autonomy and you guys getting paid fairly, right? And so Doc Lending was an easy fit, and it made sense right away when we met you guys and your CEO, who we fell in love with right away. Same mission, same focus, same goals. So without further ado, I'll let you guys talk about Doc Lending, and if Kyle and Josh, if you guys want to talk about anything personal to start off with for us to get to know you a little bit better, we'd appreciate that.
Yeah, well, I'll start at the high level on Doc, and Kyle, feel free to chime in. So Doc is a company founded by physicians for physicians. We give personal loans ranging anywhere from $5,000 up to $100,000. So non-collateralized loans, very different from, say, a home loan or a car loan, two physicians. And our sort of risk algorithm is very different than the algorithm that's applied by, say, a traditional lender. For us, we believe that physicians are a very different borrower group. We believe they're much more trustworthy. Obviously, we believe there is income resilience. And then similarly, we understand kind of the seasons of life of a physician, that, you are a trainee making, at the time that I was in residency, which was, almost 15 years ago, somewhere in the neighborhood of $35,000 to $40,000. Now is probably somewhere in the mid 50s to the low 60s. But it's not a lot when you factor some folks needing to train and say, real estate's expensive everywhere, but really, high cost of living places, the math just doesn't get around the block even to pay for an apartment in those environments. So we do loans, personal loans, to help with the seasons of life that physicians face. So, you're talking about being a trainee, low income, then you're talking about starting a job, first job out from residency or fellowship, having to really at that point start your life. So buy a house, probably start a family, probably buy a car. So, and ramping up your income while at the same time paying off loans. Long and short, during this time period, and basically until loans are paid off, you're viewed by traditional lenders as being high risk, meaning your credit profile is not mature. You have a high debt to income ratio. So they view you as kind of a prime, and maybe prime, but probably subprime borrower. And you're kind of over a barrel if you need to take a loan. And so our rates are more competitive. We factor in basically where a person is on their training, the type of specialty that they go into. We don't view physicians as high risk simply because of high student loans and a high debt to income ratio. And those are all the factors that we kind of factor into the type of personal loan that we approve borrowers for.
I think that's a great point. What I see a lot of people coming out with a lot of debt, and then they have no money, right? And even their first job right now, we're looking at the job market for physicians coming out, and it isn't great. Obviously, that's one of the things DocNation is trying to fight there, is try to get that, at least that first paycheck, or much higher, much more where it should be. And a lot of these guys are that have the ambition, that want to do private practice, one, can't get a loan, and two, have too much other overhead in their life to pay for. So what they're doing is saying, I'll go work with a hospital for 3 years, 5 years. And guess what? They never get out, right? They never take that step because they keep looking at their balance sheet and they're never, getting out of water. It's like, oh, well, I'm going to work there for 3 years. And all of a sudden they get married. Then all of a sudden they have a kid. And you're like, well, I can't give up this income to try to go to private practice now. So it's great that there's that option out there for, fellows and residents coming out to say, hey, here's a little chunk to kind of get going and get out of this situation you're in, because it's pretty sad what a lot of the docs are coming out with right now. $250,000 in loans, and then they're never going to pay that off. They aren't. I'm sorry, it just takes too long. And at least in the hospital job, but if they can get into a private practice job, a higher paying job with a little ammunition, then they can do some things.
I had a call with a client this morning, soon to be client, hopefully. And she said, I would love to do private practice, but that's not even a thought right now. I have $280,000 in debt, and I'm only being offered, the highest I'm being offered is $250,000. And that's going to take some time to pay off. And, I'm a business person. I'm not a doctor. I'm a business person. And I just stop and think for a second, 10 years of training, expertise to save lives, and they can't do it how they want to do it. And it just pisses me off. It blows my mind. She just spent a decade and can't go where she wants to go and do what she wants to do. And that's the ultimate crime for me. And that's one of the things DocNation is here to do. We're here to help you start a private practice if you so choose, but then funding will look a little bit different, because I give a presentation over the noon hour to a business group, no doctors. And it was really kind of like a practice round for this call today. And one of my associates said, well, why would doctors expect to be different? You know, just doesn't get it, right? Why would doctors expect to be different? And I asked him very simply, you're very successful at business, right? You're very successful. How many years did you go to school? He's like, I didn't even go to college. And I just stopped there for a second. And the misunderstanding of banks and lenders to what a doctor is doing and really sharpening their tools before they actually have what is respected in this country, money, which is why Doc to Doc is on the line. There's no respect there. So it takes 5 to 10 years, and no problem if at 5 to 10 years, the doctor says, okay, now I'm ready to make that jump to private practice. But just like Anthony just said, a lot of times it doesn't happen. And what I've been hearing a lot is, well, I have the golden handcuffs. I'm getting paid really good money. And I have done the last 6 years. 6 years was a call today. 6 years, and I got to this level. No way I'm starting over to go into private practice. And it was almost like a dream had been tarnished because exhaustion, to be honest with you, exhaustion to get to this level. And now it was almost, I'm not going to say for nothing, but that wasn't the goal going into medical school. So that call today was timely and important and sad, to be honest with you. Sad.
I mean, the one thing I would say with that example that you just gave there is that, talking about the businessman, let's just say he or she was someone in real estate, that didn't go to college, but had a lot of reps and probably had a personal banker and could walk into the bank and say, hey, I've got an investment opportunity. I don't have the liquidity. What can you do for me? And because of that relationship, because of that track record, that personal banker probably says, what do you need? Do you need $250,000? Let's talk numbers. If I, as a physician that don't have those reps, walk in, the banker goes, look, I really appreciate that you've got a high income. I appreciate everything you've done, but you've got no reps. And I'm not comfortable in giving you a $100,000 loan to invest in this ambulatory surgery center. You may think that this is a great investment for you, but I'm not taking a chance on this because I haven't seen, your history, and I haven't seen, your proof of having, done it over and over and over again. Whereas that same person comes to us, we say, that totally makes sense. Yeah, you want to invest in an ambulatory surgery center? Absolutely. Obviously we have to run a person's application. There are some base, hurdles that a person has to jump over. But the reality is that sort of like, sorry, you don't have a history with us. Appreciate you coming in, but I'm sorry, there's nothing I can do to help, that doesn't exist on our side.
We just got a comment that says, amen, amen. They have no clue what we do. And when I first started doing private practice, I'm a businessman. I'm not a doctor. I love doing business. I love finding loopholes. I love expediting the time a doctor with no business degree said, oh, how do I start? It's not that hard. It's not that hard. I get a lot more credit than I should get just because you guys have your head in the sand for a decade trying to figure out.
It is hard for us. And the reason it's hard for us is we're basically taught not to do it, right? When you say we went to school for 10 years, at no point is any of this in any of that schooling, right? Where, hey, this is how you market yourself. Hey, this is how you get patients in the door. This is how you network. None of that is in the medical school, the residency, the fellowship realm. I was lucky enough to go to a private fellowship, and I'm glad I did because my fellowship director, he said, you're going to learn the medicine in 6 months. The other 6 months, you're going to spend learning how to grow your business because you're not going to come out of here and go work for a hospital. You're going to come out of here and start your own practice. And that was just luck that I had the right guy at the right time. And in medicine, that's very hard to find. So it is very, very daunting for, I bet you, a lot of people on this call to even wrap their head around the fact that we say it's easy. Now, I thought it was still very daunting. Looking back on 5 years, I said, wow, I didn't really do that. It wasn't that hard. There wasn't that many stumbling blocks. Like, yeah, here and there you learn something, but that's everything in life. And I think that's my favorite part of DocNation is be able to guide people through this avenue, and having partners like Dr. Doc Lenny makes it so much easier for us. It's like, I don't want to have to go to, JP Morgan and say, hey, help us out. No, and they're just going to give out another $1 million to the real estate guy, right? They'd rather do that. They understand that better, to be honest. When in my mind, you give a doctor that's doing procedures in an ASC $100,000 to buy into the ASC, it's a no-brainer.
It's a no-brainer.
It's a no-brainer. The doctor is working for themselves. They're going to make that money back. You're not relying on someone to build a house, sell a house. The doctor is working. They're going to get checks every month. They're going to make money, but the banks really don't understand that. So I'm excited to be able to help people take that first big leap across that chasm and start doing it for themselves. That's what I like about DocNation a lot.
So I'm probably infamous for saying doctors are a walking business. I'm a businessman. I've opened and started many, many businesses. And if you have a mom and pop store and your profit is $300,000 or $400,000 and you're not looking to change the world, you're looking to serve burgers, that's pretty sweet. That's pretty sweet. Every one of you guys are doing that. Every one of you guys are doing that. So why shouldn't you have a financial group strengthening you as you move forward? One thing I do want to say real quick about all these questions, talking about money is taboo. Yeah. It drives me nuts. The questions, we're going to try to get to as many of those as possible. But as I've learned on these last webinars, the best way to do is schedule a meeting with our team. I will be on every one of those calls. I might not be the only one. We might have multiple people, but I will be on every single one of those calls. So if you schedule a meeting with with DocNation, I will be there and I will address your questions for the ones we don't get to. I brought on a new client, probably one of my favorite people so far. He was warm that I didn't answer his question last time, and now we become good friends. But anyways, here's the thing. Bankers are playing in their lane. They're human beings too, right? Because when I first started I've been doing private practice startup for quite some time now, and our team is pretty successful at it. And when I would go to bankers, when I started, I thought, this is a doctor. Like, you have any idea? No, they don't even care. They don't care. And so at first, for the first few months, I was just really upset. And it took me a while to get to the point where, hey, I need to put my feet in their shoes for just a second and understand they don't own the bank. They're not running the bank. They have a job to do, and their job is to make money, and they understand it. Doctors do not. So it is my duty to get to a place where I can represent the physician in terms of getting financing. And that's when I think Doc lending came in about a year ago. And since then, I just told my partner earlier today, 10 years ago would have been nice if you guys would have showed up. 10 years ago would have been a really, really nice thing, but you guys are here now. You guys are here now. Hey, Kyle, do you have any thoughts on the communication so far and how you think you can help the group?
Oh, absolutely. So
put you on the spot. I'm going to put you on the spot, man. I know you worked all day.
No, I think that for me, I think in most physicians, probably the vast majority of those on their call, it's a very kind of predictable kind of trajectory. We go and we delay gratification through high school, through college, always trying to be the best and brightest, knowing that the light at the end of the tunnel is still 3, 4, 5, 6 years off. And by the time we graduated medical school, we're in our residency. Average debt now is several $100,000. When we review these applications, it's not uncommon to see 7-figure debt from these people just trying to stay afloat. I remember in my own circumstance, I went to state schools, but I still had quite a bit of debt. And every few months, I had to roll over credit card debt from one 0% credit card to the next. And it was an incredible amount of stress. And this is times I should be learning how to operate, times I should be doing surgery. I should be enjoying life, with my wife, young kids, but I can't to a certain extent because I've always got in my brain, how am I going to make next month the next 0% credit card? And when you're looking at what we're trying to provide is some degree of stability and peace of mind to the people who we know 3 years from now, 5 years from now are going to be absolutely successful financially, and trying to give them some peace of mind today. And so that's where we kind of come in. We've all been there. We've all been through that stress. And so with what we do as Doc Lending is say, hey, we know where you're going to be. We know you're trustworthy, you're reliable. How do we know that? Because we've been there. We went through the exact same thing that you do. Nobody comes this far does this much training, pushes this much effort, delays this much gratification to throw it all away. And we understand that, and banks don't. And so that's really what we do. When you look at our rates compared to our competitors, we are right there with them at the very low end of the table. But then you look at our higher end interest rates for people that may not have the best credit. We really, that's where we really shine, because credit cards are significantly higher. Other banks, even credit unions don't understand their risk, but we do. And so even for folks with imperfect credit, for folks that have really high debt to income ratio, we get them. And so we understand what the risks there are, and we measure those risks well. One of the questions was, how do we measure risk? And it's through a proprietary algorithm where we know, based on different.
This is good right here, Kyle. This is good right here. Go into this, because I think we had a question earlier.
Yeah, I think it's a proprietary algorithm, but it's based on a variety of factors that we think that banks completely undervalue. And it has a lot to do with different characteristics that are really physician centric. And so using those algorithms, we can generally significantly look at a risk profile differently than the banks can, almost certainly to the favor of that applicant. And so when we come with significantly better rates than people have been shopping elsewhere, it's really because we think we value risk way better. We understand it better. We know who's where you fall in that risk profile. And a lot of it has to do with the fact that we know where you're going to be 3 to 5 years from now.
Yeah, I agree with that.
And the only other thing I would just say is, like, when there is definitely, so we're in the thick of matched fourth-year medical students who are looking to go into starting their residencies, 6 weeks from now, and are moving from their med school program to their residency programs. And, for me, so the other thing that borrowers get is a call from a fellow physician. Say, hey, I'm Dr. Josh Lumbley. I'm an anesthesiologist from Ohio. Nice to meet you. I just want to walk through the terms of the loan with you, answer any questions that you've got, spell out the salient features, and kind of describe what the loan looks like. There is we're all members of the same fraternity or the same sorority. And when speaking with medical students and residents, there's also this idea of, like, I was there. I totally remember, like, sweating how I was going to come up $4,000 to drive a U-Haul truck from Houston, Texas to Boston.
You remember it.
Yeah. Yeah.
Painful.
Yeah, exactly.
That's the plan. That's it. You match it in church. It's like, hey, you have to be here in June. You have no money, and you're getting paid $60,000 a year next year. That's it.
Anthony, you're a big sports fan. Josh, don't forget where you're at, please. Anthony, you're a big sports fan, aren't you?
Yeah, big time.
You think that professional athletes are treated like Josh?
No. I mean,
what do professional athletes do? No, hold up a second. How important is it that what professional athletes do? It's fun. It's really fun at best. At best. I lived that life. I have a whole bunch of buddies right now that I grew up with that are in professional sports right now. And guess what they do? They play their sport.
Yeah.
I have buddies who are on commercials, are in magazines, and guess how much effort they put into that? They show up and say hi and do whatever it is they do, and they go back to playing sports. We got people saving lives. We got people taking care of bodies. And the problem here is you guys are worried about how you're going to get to your next step.
Yeah.
You got to understand my frustration as a business person, working with you guys for the last 15 years. It's almost like I'm almost more upset. I'm almost more upset with the community of physicians as a whole and I got a little backlash last time, but the truth is I met with a doc last Thursday night, and he said, what would happen if all the doctors, if we went on strike for 2 hours? And I was like, man, I got hammered for saying that. For 2 hours, everybody's ears would open, and you would get not just what you want, but what you deserve. If professional baseball went away, what would happen? Nothing. If you 3 gentlemen on the screen went away, what would happen? Death.
Yeah, ORs wouldn't get staff, that's for sure.
I mean, really, think about, we don't even have to go with names, but think about worldwide businessmen right now. You think that if they had the opportunity to get what they wanted by striking for 1 hour, they wouldn't do it? They wouldn't do it? They would. They would do it in a heartbeat. But you guys take an oath to say, it's more than money. It's more than living the life I want. And it's really hard for me to swallow sometimes.
Well, here's my problem with that is we take the oath and we all live by that oath. That's why we are physicians, right? I take a stab at all my buddies that are in finance or that are lawyers. No one fails out of law school and goes to med school. Plenty of people fail out of med school and go to law school. Same with finance, right? So
I'm not mad about that. I'm not mad about that because it's a good point.
My biggest issue is that we need to change the mindset of the physician, that it's not wrong to get what we deserve in both autonomy and money. And it has to come as a group effort, because the biggest problem we have, and one of our biggest societies that I don't like to name on these things, but we all know who they are. We have so much infighting against physicians, even on these. We say something and people will say, well, that's not really right to say that. Yep. It's the truth. And here's the real hard truth of the whole deal. The people running the hospitals, the people running the insurance companies know that. They know that we won't do anything, and they keep just chipping away, right? Every year, we've gotten a 4 to 7% Medicare cut the last 3 years after COVID, after we all took a hit during COVID. 1, we took less money during COVID. 2, we put ourselves in harm's way. 3, we all worked overtime. And then we're rewarded with getting 3 straight years of Medicare cuts. And they know we could just keep taking money from this part of the pie and giving it to, look at what United Healthcare made $28 billion last year. That's insane, right? 5 years ago, they made $2 billion. And it is just getting to the point, and listen, patients are no longer, I used to think, and I told you this, Reed, I used to think, well, I don't want to upset the patients if we ever spoke up or did anything. And I think you're a patient, right, Reed? And yep. I finally, in hearing from patients, like, no, you guys are getting screwed. Like, I think the public is waking up to that very well. And, that's the point I always try to make, though, when we have this conversation is physicians need to band together. We need to step up. But that's why it's going so badly, is the people that are running the show aren't physicians, and they know we won't. So that's why they just keep chipping away. But eventually, you're going to back us into a corner, and there's only going to be one way out, because it's either burnout or we have to fight back. And that's my statement on that. And that's where I really plead to the people on this call to band together, join this. That's what we're trying to do with DocNation. Join up, join together. We're having a town hall in June. All the members will be on that town hall in June. Everyone will be on the screen. And we're going to talk about how to get this done. How to get this done the right way, get everyone moving in the right direction, and make something happen. I don't think we need that many doctors to do it. We don't need 8,000 doctors to strike. We don't need 8,000 doctors to make noise.
Anthony, what I would say, on the mental health front, it is a really difficult time to be a physician right now. And I would say it's just difficult in taking care of patients right now. And that is another reason that we exist, is because, you heap on, the stress of what you are bringing from your personal life, et cetera, to the hospital. Scale of 1 out of 10, maybe 8 is your breaking point. Historically, pre-COVID, you might have been coming to the hospital with a 3, and then you can, the autonomy loss in the OR, sick patients, some of the challenges, production pressures, et cetera, that might exist there. You might be leaving the hospital as a 6, but post-COVID, it is sometimes, you're short-staffed. It's increasingly more and more difficult. Some of the stuff you're bringing from home may put you at a 4 when you hit there, and you're leaving the hospital at 8 to 9. And, the last thing that I personally, speaking as an individual, want to see is a physician that's productive, that takes great care of patients, that says, I'm out. And so, if there is a way, whether it be reducing stress, a financial stress that exists, that you couldn't expect, that just came out of nowhere, or one of the reasons that people borrow from us is they got sideways during COVID with credit card debt, and they're trying to climb out of high APY revolving credit card debt, and you want to consolidate with a lower loan. maybe that makes life a little bit easier. So you're more dialed in when you're at work and you're taking care of patients. And then similarly, using that other example, maybe the opportunity is right for you to make an investment, but you just don't have the liquidity. That's stressful as well. Maybe you miss out on that opportunity because you don't have the liquidity. That is another opportunity for us to make that connection and help support you as you do that investment. Only other thing I did notice a question that sort of said, is Doc to Doc fully funded by physicians? So a large portion of the money that we loan out is funded wholly and completely by physicians. Obviously, we have grown significantly, that we have a line of capital that helps support above and beyond the capital that we have on hand from physicians, but a very significant portion of the money that we loan out comes from physician investors. Again, to Kyle's point, because we believe in supporting physicians along that journey, because all of us as strategic advisors, all of us in this community have been there in that journey.
Yeah, it really is. I mean, I love the message that you guys are sending with this. I just a little personal story is that it really kind of hits home, because I left a group to do exactly to start my own practice and have built it up now. But yeah, there were certainly times when I looked at my wife and thought, can we really pull this off? Can we do that? And I will never forget the day where I opened up a mail, saw a check that was going to cover the rent, going to cover the employee salaries for a couple of weeks. And I said, wow, I know it can be done, and I absolutely can do it. And I have beating the drum for my physician colleagues who are so inclined to seek that empowerment, that autonomy, exactly what you're talking about, because there's nothing so fulfilling to be able to be in control of your own destiny. And I've learned it not just through my practice, which has been absolutely phenomenal, but we've done it through ambulatory surgery centers and through other organizations where the more power and control that is held with the physicians, things just tend to work better outcomes, happier doctors, happier patients. And this Doc to Doc is just an extension to that. It's giving back. It's us, those of us who now have been walked down that path and are trying to recognize the stress points, the points in our career, in our lives where we had a high degree of friction and frustration, and say, what can we do to improve this? And this seemed like low-hanging fruit. This is a very frustrating time for well-educated young people who shouldn't have to necessarily deal with this amount of stress. Right. And it's simply because there's a lack of understanding by the general public for the needs of these physicians and the small amount of effort and just looking at the prism differently that could allow these hardworking, intelligent people to have a better quality life. And so that's what we're doing. And it certainly takes physicians to have walked that path before to see where the issue is to fix the problem. And it's not just in lending, it's everything. It's at the hospitals, it's in the practices, it's everywhere else. These are things that need to be led by the docs.
It's at the hospital level. You said financial, DocNation has that covered through Doc to Doc, right? At the hospital level, we negotiate contracts and take care of you. The goal of DocNation is to be a drone, right? So there's a professional athlete in basketball right now who just got back on the court after a 2-month hiatus because there was some family stressors. Have you ever heard of a doctor getting that kind of treatment? And this guy shoots a basketball for a living. That's a problem. Yeah. That's a significant problem. The goal of DocNation is to eliminate that. And how do we eliminate that? Autonomy. We want to create autonomy through the negotiation process. We want to put you guys through an understanding of how do finances work. It's a very short course that we will walk you through so that you're empowered to know how to either run a business or do what you need to do with your money, but how do we get you the right money? And Doc to Doc is here to do that. And so I'm just grateful that you guys are here. I appreciate your humility. I don't share that same humility when it comes to representation of doctors. I just don't. I'm past that. I'm frustrated. We're frustrated. We have a large company behind us, and not one of them feels differently than I do, unless you're a doctor. And we have those people who make up our business as well. 95% of administration. Okay. 95% of people who call the shots are not doctors. I played sports my whole life. I never played for a coach who didn't play the sport before me. Never, not one time. And I had a different amount of respect. I had a call last Thursday morning with a doc who was supposed to be doing 30-minute meetings. That was his agreement, 30-minute appointments, right? And he was over by like 14 minutes on one of them. And, you know, they had let him kind of go back and forth a little bit in a 10-minute period and got reprimanded because he's spending too much time with the client. I'm like, what do you mean 30-minute meeting? Send me your contract. I want to see where it says that because I don't believe you. And I'm not going to disclose too much information, but a non-doctor came and reprimanded him immediately after the appointment. You don't have anything better to do? Have you ever? And so, you know, there's a significant amount of frustration on the part of DocNation and the people that we represent. He's a client of ours. He's a client of ours. And so we got the CEO on the phone and we went through the contract and borderline politely explained to him, this has already been negotiated. Let's not do this again. Let's not have this problem again. And it was understood. You know, when doctors understand that they are a walking business and that business needs to be represented, things just work out much better.
100%. I mean, that's the mindset that we need to change. That's the goal of these webinars, is just to get enough of those people to change their mindset on what we should expect as a physician. And the biggest analogy that we keep using is just expect to be what an NFL player is, what an MLB player. What you're doing is more important. You've put more work into that, and you're more important to society than that. There's no reason. And here's the thing. Here's the thing that people always say to me. Well, there's more money in professional sports. Not even close. Not even close if you look at the numbers. It's a B for the money in sports. It's a T for the money in healthcare. It's over $1 trillion industry.
You were breaking up. You were breaking up. Say that again. That's important.
So everyone else says, well, there's not enough money in healthcare. There's plenty of money in healthcare. It's just going in the wrong direction. The players in athletics, the four major sports groups, get 50% of the revenue. That's their agreement that they have with players. Physicians get around 9% of the revenue from healthcare. Those are real numbers that are published. And we're not asking for 50% of the revenue, even though without physicians, there's no game. You have no hospital, you could figure it out. You have no, rep companies, you could figure it out. You have no insurance, you could definitely figure it out. We probably figure it out better. No physicians, there's no game. You could have a great stadium. Jerry Jones could have a great stadium. You could have a great logo. No Ezekiel Elliott, well, he's not on the team anymore, but no Tony Romo, no Troy Aikman for the last, there's no Dallas Cowboys for the last 20 years. I'm sorry. And that's what you should expect being a physician. You deserve that. It took me a while, it just started in my head. I'm like, why do we keep just getting beaten down? Like, I guess this is just normal. One person said they had one class on financial advice during medical school, and it was the last class, and it said, don't buy a restaurant. Like, that's, I think, the financial advice we get. Like, in the middle of the OR, the surgeon will look at you and be like, don't invest in baseball cards or something. You're like, oh, all right. Like, that's literally what we get. It's not even a joke, guys. Like, this is what happens, and we just don't know what we're worth. Know your worth, right? We talk about that all the time, Reed. Know your worth, and it's good to have. We want to partner with companies like Doc to Doc. This is the point of DocNation. Bring everything in house. I don't think there's anything that a physician can't do.
But the truth is, how do you guys know your worth, right? You feel important. You've worked your butts off for a decade, but how do you know your worth? Because the person hiring you doesn't care how you feel feelings wise. You need to be educated on your work RVUs. You need to be educated on.
I have the answer to that. I'll ask Kyle this. Kyle, how much is the professional fee versus the hospital fee for the surgeries you do?
For 64721, it's $447 for me and $750 for the for the facility. So yeah, it's about for that, it's about times and a half. But to pivot on that, you're absolutely correct. So the facility is making a heck of a lot more than the surgeon is, and I'm taking on a heck of a lot more risk, and I'm seeing that patient for the next forever until they're better.
They do nothing.
Keep in mind the rules are written against us in the sense that you go. I take my dog into to see a vet, and the vet owns the X-ray. The vet owns the hospital that's affiliated with the clinic, and nobody blinks an eye, and everyone gladly pays their vet bill. For some reason, physicians in the United States are barred from owning any part of a hospital. It's part of the Obamacare Act that says we're no longer, if you're any physician-owned hospital that came after 2010 is not allowed to bill Medicare or Medicaid or any federal program. And so talk about the rules being stacked against us. Our ability to not have any autonomy in one of the most important parts of our practice, which is the facility in a hospital where we do it, really limits our ability. So your point about lobbying and your point about being organized, I want to go to a place where physicians have as much input and as much skin in the game as possible. And so the ability to have access to a physician-owned hospital would be huge.
Do you know what basketball team Michael Jordan owns? The Charlotte Hornets, right? Why would you guys not be able to invest in something you spent your whole life doing? That would make sense.
Yeah, when that happened, that was a shocker. We had no lobbyists at the time. We took it pretty hard in Obamacare and whatever you want to call it. We try to.
I want to say something. I want to say something real quick that I just found out today. My next door neighbor is a nurse practitioner, and down the street, 4 houses down, is a doctor, and excuse me, a traveling nurse, and they both make the same amount of money. They both make the same amount of money. They're good friends. They're good friends. I don't understand how, to be honest with you. They're good friends, but they both make the same amount of money. And I'm sorry, I misspoke. Not an MP, a nurse, a traveling nurse. Why? I would just like to leave.
There's some traveling nurses making more than physicians right now.
I know, but why?
Because they have a union.
Okay, so that's the point.
That's the answer.
Right? That's the point of DocNation. Is at the end of the day, yes, we provide services. Yes, we provide representation. We've been doing it for a while. We're really good at it. But at the end of the day, DocNation was unsuccessful if we weren't able to create a union. And that's the goal. And so we bring on Kyle and Josh because financing of an operation is one of the most important pieces of any operation. And so politically, we're very engaged right now. And on the cusp of having some specific introductions made that could shorten the length of our goal to at least begin this union. And so doc-to-doc lending comes to us at a really, really good time, a really important time to strengthen our nation base. And we're grateful to have you. We're grateful to have you. Thank you guys for your time.
Yeah, it's great. Do you guys mind if I just do a quick run? I've seen a couple of the questions just on kind of the meat and potatoes, the meat and potatoes of the loan itself. And so I'll, for the folks that have kind of asked some of the questions about the loans, the rates, the origination fees, et cetera. So Kyle kind of talked about the risk underwriting that sort of determines an individual's rate that a person gets. They range anywhere from 8.49 up to, say, the high teens. Obviously, as I mentioned earlier, this is a non-collateralized loan, meaning unlike a car loan or a home loan, which are a collateralized loan, you miss those payments, the lender, the bank can take that home back. This is not that way. So if there's a default on a personal loan, the lender simply eats it. So by nature of the fact that they are non-collateralized, the rates tend to be a little bit higher. So all that said, they're about a percentage point above on the low end, above what a 30-year mortgage is. So really competitive on the low end for prime borrowers. An individual would come to the website, apply for a loan. Typically, they are often get conditional approval instantaneously. So you're able to see those terms in your inbox, followed up by a phone call from someone like me or Kyle to walk through the terms of the loan with you. We only do a soft credit pull. We will only ever do a soft credit pull. So an individual's credit profile remains pristine and intact throughout. Again, we believe that physicians and dentists that borrow from us are a different class of borrower, that they don't need a hard credit pull, and that based on the information that an individual puts in, we should be able to do an appropriate risk profile and feel comfortable in proceeding in that relationship and lending. Last but not least, in terms of the fees, there's only a single fee. It's a 2% origination fee, so no underwriting fee, no insurance fee, none of that like large gradient between, hey, you told me 7.9, but really my APR is like 10.7. What happened? What's the deal with the 3% spread there? For us, it's a single fee amortized over the full term of the loan. All of our loans are standard 5-year terms. We never encourage borrowers to take on more debt than they need. And in fact, if you've got the capital, once you get through that season of life to pay the loan off early, we always encourage borrowers to pay the loan off early. There are no prepayment penalties. So if you're able to pay it off early, we would certainly encourage you to do so.
Thanks for that, Josh.
And I'll just hit on that real quick. That's really key, is that we understand that for a lot of folks, our loans are a bridge, and we want them to be a bridge. We know that many of our clients never use the 5 years of the loan. They don't intend to use 5 years of their loan. Their intent is for the next 18 months just to get them from point A to point B. And so we're really filling that niche in the market, because a lot of other lenders don't understand that again, yeah, if you need it for 5 years, you got it for 5 years, but a lot of our borrowers don't need it for 5 years, and we encourage them to pay it off when they can.
But don't eat beans and rice to make those to pay it off early. You know,
Thank you for that, Josh. That's the whole point. Don't eat beans and rice to pay it off early, but then also don't throw your dreams away because you can't find $100,000. Let's not do that. Let's not do that anymore. I did build some pretty good banking relationships before I met you guys that do not do what you guys do, because I spent a lot of time, because it was a real problem. People were telling me no for my services because they couldn't get funding to start their private practice. And I just saw so many people say no to their dreams, and it's sad. It's to be honest with you, the fact that doc-to-doc lending is even a thing is a problem. It's a problem. And I'm glad that you guys saw that need and filled that need, and we're grateful to have you. But it's the whole reason DocNation was born, to create a union, because once the union's created, these kinds of problems won't be a problem anymore. The understanding of a physician and the people on the front lines is going to be there, and there's going to be changes made. So we're proud to bring you guys on tonight. We thank you for your time. We appreciate the brotherhood and the friendship, and I would just say I would give Doc Lending a 10-star review in just their commitment to physicians and the understanding of the communication. One of the things I have a lot of experience with is going to banks on behalf of a doctor, and it's not a good experience. It's not a good experience, because I'm over here telling them this is the person I have. I'm thinking this should be easy, and they come. Doctors come out of schooling thinking there's going to be some respect there, and this is not. It's just not. It's a tough beginning to a professional life, to serve humans, to save humans, to rebuild humans, and we're happy to have you guys fill that void for us. So thank you for your time. Anthony?
Great stuff. I'm happy to be partnering. I'm happy you brought doc-to-doc lending to us, because I think this is what it's all about. Keep it in the fraternity. Doctors should be helping doctors. We need to keep this all in-house. People ask me when I started DocNation, well, can nurses join? Can, other professions join? What about dentists? I said, no, this is DOs and MDs. And that's it. And we're keeping it all in house. We're building a fraternity. We're building a union, and we have to do it. We have to do it. You can't keep poking the bear and expect the bear not to wake up. And we're a lot of really intelligent people that want to do good, and we deserve that seat at the table. We deserve to run the table. They'll be lucky to have a seat at the table after this. That's my motto when I talk to people about DocNation. And I'm very excited to work with people that like your guys, like yourself. So thank you for coming on, and I see a great partnership here. You guys fit our model perfectly, and will really help the members of DocNation a lot.
I've spent 0 time studying medicine, and I'm not going to. I represent you guys. We have a question that says, do you assess business plans? I'm very good at it. Schedule a meeting with me. Just like if I came to any of these 3 gentlemen on the screen for their specific services, I would hope to hear that, only I come broken down and concerned and worried. It's my health. The answer is yes, we assess business plans. We're very good at it. Not only do we assess them, but we'll probably rebuild them with you and for you, and or make additions to them. The person who said that, I love that. I love that you jumped into a business plan. I'm here to help. Our team is here to help. Schedule a meeting with us, and we can go over that as soon as, I think, early next week. So, hey, Josh and Kyle, thanks so much for your time. We really appreciate you guys.
Yeah.
If there's nothing else,
hey, listen, one other thing you said, so we are humble. You're not humble. I will say for Kyle, because Kyle is humble. Kyle is an insanely talented hand surgeon. Like, this guy is an absolute machine. So I will not be humble on his behalf, because dude is a rock star.
I love it.
I appreciate it.
Thanks for that,
guys. Thank you so much, guys.
Thanks, guys. Take care. Have a good night.
Have a good night.
Bye-bye.